Welcome to the channel Get Rich. Today, the company I am going to analyze is Polycab India. I split the analysis into three parts: the business of Polycab India Limited, analyzing its financials, and finally the valuation part. So make sure you watch till the end. So going to the business. The business the Polycab India is in is wires and cables, and they are foraying into FMEG, fast moving electrical goods. So if you look at the overview of Polycab India, they are the number one manufacturer of wires and cables. Polycab India is engaged in the business of manufacturing and selling wires and cables and fast moving electrical goods, and is the largest manufacturer in the wires and cable industry in India. For long, Polycab has dominated India's cables and wires market for retail and institutional buyers. In 2009, it diversified into the engineering, procurement, and construction (EPC) business, which includes the design, engineering, supply, execution, and commissioning of power distribution and rural electrification projects. The plan to foray into EPC project is not to take up any EPC contracts, but to utilize these EPC contracts to sell wires and cables. In 2014, it also diversified into FMEG segments. In recent years, they have enlarged their product to become India's fastest growing brand in fast moving electrical goods. If you look at the market share of Polycab India, they have 18% market share in the organized sector of wires and cables, and they have 12% market share in the total cables and wires industry. They have export to 40 plus countries over the last 3 years, and their FMEG business, their fastest growing sector, have grown 51% growth CAGR over financial 15 to 19. And if you look at their distribution network, they have pan-India distribution network, around 3,400 plus authorized dealers and distributors, and they have 1,15,000 retail outlets. And if you look at the location, the fact that they manufacture in-house most of their products allows them to provide guarantees of quality, service, and short notice supply that few competitors can match. Coming to their business segments. So their first and main business segment is wires and cables. So this segment contributes around 86% of their revenue. And the second one is FMEG, fast moving electric goods. So in this segment, they have fans, they have LED lights and luminaries, heaters, switches and switch gears, and solar products. So these constitute around 8% of their revenue. And then comes other revenue side, which is mainly EPC business, power distribution, and rural electrification projects. And then if you look at the revenue mix, they just started FMEG in financial 14, and be noted that they are growing at around 14 to 15%, but still their FMEG pie of the revenue is increasing from 4% in financial 16 to almost 8% in financial 19. If you go into the wires and cable business, so let's start with wires and cable business. So if you look at the wires and cable industry, in financial 18, they contribute around 40 to 45% of the electrical equipment industry. If you look at it, 8% of the manufacturing sector in terms of value is wires and cables industry. It contributes around 1.5% of the overall GDP. So if you look at the overall industry as a whole, if you take at the revenue side, so in financial 18, the industry itself is 52,500 crores, if you see here in the graph. So it is projected to grow at 14.5% CAGR in the next 5 years. So it's going to be a 1 lakh crore revenue segment in financial 2023. So then if you look at the organized and unorganized sector, in financial 14, the organized sector was just 61%, and in financial 18, it's almost at 66%. So it's going to grow to 74% in financial 2023. So already the industry as a whole is growing, and organized sector is gaining market share from unorganized. So it's going to, the the organized sector people is going to grow faster than unorganized. And if you look at Polycab, Polycab is the market leader in wires and cable segment. If you look at the next competitor of Polycab, which is Phenolics Industries, so they have around 3,000 crores revenue. So if you look at Polycab, they are almost generating 2.3 times revenue of Phenolics, 2.1 times revenue of Havels. So if you look at that, if their market share is so huge, because even if you combine both Phenolics and Havels, Polycab is still the market leader than combined Phenolics and Havels. So they have 80, as I said earlier, they have around 18% of organic sector and 12% of the total market share. And then if you look at their products, they have power cables, they have optical fiber cable, they have solar cable, they have building wires, they have flexible wires, they have control cables, they have instrumentation cables and other cables such as flame retardant, low smoke, you name it. They have all types of cables and wires which is possible. So if you look at their customer base across industries, they have customers in power sector, oil and gas, construction, IT park, infrastructure, metal, non-metal, cement, agriculture, real estate industries. So all of these industries are customers of Polycab. So they are not dependent on one single industry or one single particular sector. They have a lot of products to offer across different industries as a whole. And if you look at the 9-month performance of financial 20 with financial 19, they grow their revenue around 17% and their EBITDA margin is lies around 11 to 13. So they are constantly increasing their EBITDA margin, but they are staying close to almost 11 to 13 as a EBITDA margin. Then if you look at the competitors like Phenolics Cables, Havels India, KA Industries, these three are the main competitors for Polycab India. So Polycab is present in all of the segments. So if you look at Phenolics Cables, they are almost present in all of the cables, but not in instrument cables. So this which is not available in this table, but they are not available in those segment. But Havels India, they are not available in power cable. But then Polycab is available in all of these segments. So that is also a strong point for Polycab. And then look at the customers, look at their customers. They have all high profile customers. You have Southern Railways, Bharat Petroleum, Siemens, Blue Star, ACC, Bosch, Indian Oil, HP, Reliance Jio, Reliance Industries, L&T, you name it, like Tata Steel or JSW Steel. They have all high profile companies. So they can grow their pie a lot. Then if the market is going to grow as a whole, Polycab is going to be grow much higher than the industry. And then coming to the FMEG business. So FMEG business, what is the main components of FMEG business? So mainly Polycab is present in fans, switches, switchgear, lighting and water heaters. So if you look at the market structure for all these things, so first if you look at fans, the market for fans, only fans at financial 18 is around 8,000 crore. So out of that, organized sector is took around 6,000 crore. So if you look at the CAGR, which these segments is going to grow, they are going to grow at around 7%. But if you look at the organized sector, they are going to grow at around 8%. And if you look at switches, they are going to grow at 11%, and switchgear, they are going to grow at 10%, lightning, they are going to grow at 12%, and water heater, they are going to grow at 15%. You can look in the graph by yourself. So it's a huge high growth. They are just entering into these business segments, and currently they are just around 8% of their revenues coming from FMEG business. But then they could grow much higher because their FMEG is business is going around 50 to 55% every year. So that's going to be huge. Almost fans would contribute to almost 40 to 45% of their top line, and then luminaries, lights, switches and switch gears is around another 30 to 40%. And the balance is all small product categories. So if you look at the utilization rate of these FMGG business, they are at around 60 to 80% utilization rate compared with utilization rate of Wires and cables, they are almost around 70 to 75% utilization rate. So also they have some room to increase their demand, and then they don't have to do much capex. They're almost doing 300 crores of capex every year, but I think that's enough. So if you look at the 9 month performance with financial 19 and financial 20, see the revenue is grown 46%. Compared with wires and cables, it's just 17%. Their FMGG business is growing around 46%. But look at the EBITDA margin. EBITDA margin, they are just in 2.6% because they are just scaling up the business. They don't take the largest of the profitability yet. They did not reach the highest profitability yet because they are just growing. Their EBITDA margin is around 1.2 to 1.3 to 2.6. But if their business is grown much bigger pie, then they are going to a higher margin. For example, Havels India is a big FMEG player. They have around 11 to 12% of their EBITDA margin. So there is enough room for this EBITDA margin to grow from 3%, 4%, 5% to almost 10, 11%. The management guided that every year EBITDA margin of FMEG business they can grow 1.5% every year. And if the revenue pie is also grown to a much bigger level, then it's going to be increase their push their EBITDA margin further high. So then look at the other business. So the other business, which is grown around 56%, and their EBITDA margin is huge, 17%. But then this is because of just one of business they got, because they got a very profitable EPC business. That's why their revenue and EBITDA margin is growing, because in the other business they are only having EPC business. They are where they try to sell their cables and wires with this EPC business. So they don't have much ambition to grow EPC business much higher, but they can remain at the same percentage of revenue which they are getting currently. So the EBITDA margin can stay around 10 to 12%, but 17% is because of the one of highly profitable project they have done in the past financial year. So then growth opportunities. What are the growth opportunities for Polycab? So first one is increasing demand. So there are increasing demand in power, light, communication. So these are the very high growth increasing demand. So it has opened the door of opportunities for the wire and cable and electrical equipment business. And then the next one is increase in organized sector, because organized sector is already growing and taking market share from unorganized sector, which will lead to higher growth. And third one is government initiatives. There are a lot of government initiatives in power and infrastructure which is supporting Polycab's business. So first is rural electrification projects. So the cables and wires is of course necessary. And then if you see capacity addition under the national solar mission, yeah, that's going to help Polycab. Housing for all by 2020, targeting 20 million households, that's going to help Polycab. Smart cities mission, envisioning core infrastructure to 100 smart cities. The government spend on key infrastructure on roads, railways, mass transit systems is projected to rise in the next 5 years, which is going to help Polycab growth as well. And finally, export-led growth. So they are just starting to do export business because they have a huge contract from some from Africa, and they are also doing one huge export for optical fiber cables, one in Africa, and it's a one-off business. But then they are trying to improve their export business. They just established a distributor in US, and then they are starting to go into a lot of other export business. So these are the main growth opportunities for Polycab India. And then joint ventures, they have two joint ventures. So the first one is Riker based private plant. They have 20 crore investment in there in 2016. It's a 50-50 joint venture with Trafigura Private Limited to produce copper rods. So because their main key risk for Polycab India is raw materials, because that's based on commodity business. Their main key raw material is aluminium, copper. So these are their main raw materials. In order to manage these risks, they set up their joint venture with Trafigura Private Limited. So this plant, once fully operational, it will fulfill much of their demand for their critical raw material. Besides their existing raw material, which includes other key raw materials which are required for their FMEG and wires and cable business. This includes aluminium, aluminium rods, several grades of PVC, rubber, GA wires and strips. So these all they are trying to have premium positioning, that they are industry peers will hard to emulate, because they are doing a lot of backward integration, and they are trying to establish, and they are manufacturing their own raw materials, but still they have to import copper and aluminum, and the commodity prices risk is still there. But then they try to mitigate the risk by establishing this kind of copper rods business. And then they have another one is Techno Electromech Private Limited, which is they have around 9 crore investment over there in 2017. It's also a 50-50 joint venture. It's for manufacturing LED lighting and luminaries. So these are the main joint venture they are involved in. So let's look at the top account concentration. What are their account concentrations? So if we look at percentage of revenue from top customer, it's around 5%. So if you look at percentage of revenue from top 5 customers, it's around 13%. And if you look at top 10 customers, it's around 20%. That's quite okay. That's not a huge risk of having concentrated accounts. So it's still fine. There is I don't see much sales erosion because of this one-off event with some one industry or something. So this is good in with Polycab. And then if you go into financials, so we come into the second part, financials, which is income statements. So if we look at the segment income, so the first one is red one is FMCG. So FMEG, they are growing at very huge. So if you look at the revenue of FMEG in financial 19, it's around 643 crores. But then if you look at EBIT, it's just 7 crores. They are not starting to give profitability yet. They are just starting to reap benefits. So in financial 14, but they are still growing. If their profitability is increasing, then they are going to give a lot of profits as well. So then they have wires and cable business, which is around 7,000 crore in financial 19, and other business which is around 460 crores. So wires and cables, they are giving a lot of revenues. It's around 835 crores is given only from wires and cables. And then let's look at the revenue growth. So the revenue has grown at 14% CAGR from 2015 to 19. EBITDA has grown around 22%. PAT is grown around 33%. This is because they have increased their margin consistently from 2015 to 2019. But then I feel they are almost reached a point which they cannot grow their margin so big. But they grow their margin from FMEG segment, but then wires and cables, yeah, 11 to 13, it's already they are in their highest possible, I feel. So these are their growth pattern, and they are growing huge. They are a growth company. Even though they are a market leader, they are still growing huge. And if you look at the book value, earnings per share, they are growing. And if you see operating margin, they are growing. And the return on equity, it grows from 10% in financial 15 to now around 18% now. That's also a good sign. And return on capital employment, that is also increasing from 16% to 28%. Debt to equity, they are reducing their debt as well, because since they recently came into IPO, they got IPO money, and then they paid back a lot of their debts. So they are almost debt free company. So their interest cost is going to go down. So it will also increase the profitability further. So it's all positive I see from this company. And then balance sheet. So if you look at the capital expenditure, so the capital expenditure, they are almost doing around 230 crores, 220 crores, 300 crores every year. But then it's starting to decrease. But then, yeah, they say it's around 300 crores they need to expand their business and also maintain their export manufacturing plant compatibility with the requirement. So these are the main things. And then if you look at the shareholding pattern, so 68.6% the promoter is holding, so they didn't change much, and around 31.4% is held by others. And if you look at FII plus DII, they are increasing slightly, they are not selling, so that's also a good sign. Okay, then coming to the valuation part, so their revenue is growing at around 14 to 15%. So the industry is going to grow at around 14.5% for the next 5 years. But as a market leader, I assume they are going to grow much faster. But I estimated 14%. I projected the earnings of 14% for the next 3 years. And if you look at the net profit, they are growing at 22%, 14%, 14%, and 14%. But they are going to have a huge profitability because of increase in profitability margin with the FMEG segment. So let's come to our price target. So they are currently trading at around 17 PE. So based on that, they have a 1 year estimate of 948, 2 year estimate of 1081, 3 year estimate of 1232. So cumulative price growth is around 25% for 1 year, 42% for 2 years, 62% for 3 years. So as an average wires and cable industry, they have a trading multiple of 20 as average PE. So I am estimating very conservatively with PE of 20 because they are expanding their revenue from FMEG segment. So the biggest FMEG player, Havels India, they were trading at around 50-60 PE, but currently even after the market fall, they are trading at around 40 PE. So I feel Polycab India is also going to have PE re-rating very soon once they started increasing their FMEG revenue segment. But I am estimating the price target very conservatively with PE 20. So with PE 20, they are going to have price target from 1 year is 1115, 2 year is 1272, 3 year is 1450. So cumulative price growth 47% for 1 year, 67% for 2 year and 91% for 3 years. So if you can hold for 3 years, I am sure it's going to give 2x return for this company. So in the long term, the company is a buy, so you can buy it, but do your due diligence before buying it. This is my personal opinion. So thank you for watching. Have a nice day. If you like the video, like it, subscribe it and share it. Thank you. Have a nice day. Bye.